Are you ready to take your first steps towards financial freedom by investing in property? Whether you're a first-time investor or you started your portfolio but need some help continuing to grow, 2022 REB Buyer's Agent of the Year and Rising Star finalist Lachlan Vidler and his team at Atlas Property Group are here to help. As experts in property investment, Lachlan and his team are ready to help you take your next step in growing your portfolio. By completing the research, sourcing and negotiations, Lachlan goes the extra mile to find you a high-performing investment property. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? It's Phil Tarrant here, host of the Smart Property Investment Show. I hope you're well. Hope you're smiling. I know a lot of people who invest in property are smiling at the moment. They've just had a huge amount of growth, 23%. If you listen to the numbers, 25 in some areas over the courses of last year. So there's a lot of investors out there in the market looking at where those opportunities are. A lot of them are thinking about where and how do they move to the next property, the whole refinance play with all the equity that's built up. Some people, 25% growth. So for some, they're going to think that's lazy money. That's not really doing much for them and they're on the growth pathway or trajectory to do more in property. For others, they're sitting there thinking, wow, that was a nice year to have as we get on a pathway of thinking about what retirement looks like. But one of the big challenges at the moment, and we're seeing it right across Australia, in markets right across Australia, is irrespective of the intent to want to buy property, finding the right property is in this market very difficult. And the flood of properties coming onto the market, which we're told about as markets started to soften, isn't yet really being realised. So it's still quite a tight rental market. Some areas, time on market is literally only counted in days on a hand. So the smart investors are quick, they move fast, they're well prepared, they're planned, and they capitalise in that market. But where have all the invested properties gone? Who knows? Is there out there? I'm sure there's plenty of properties you can buy. They might not be the right investment properties. We're going to get into that today. Lachlan Vidler, he's back in the studio. He's director of Atlas Property Group. Lachlan, where are all the investment properties, mate? You're in the business of finding investment properties for people. You should be on a beach somewhere because you can't find any at the moment. What's happening?
Phil, how are you, mate?
Good, mate.
Where are they? I mean, I don't know. I think it's certainly becoming harder to find them, right? And I think for the everyday person who's just a bit of a jump on domain or jump on realestate.com and have a search, they're definitely finding it a little bit more difficult to find them because despite what people might read in the media or the broader media, it's still hot. It's still really, really hot. And especially in the markets that are performing really well. We're definitely seeing some softening in, I guess, non-investment grade areas, but the ones that are certainly stacking up on the stats and the data side, and then when you put the boots on the ground and you have a look at why, they are just burning hot right now.
Yeah, I'm hearing that from a number of different people. I saw a thing land in my inbox only this morning. It's from another buyer's agent. We're very fortunate, Lachlan in Australia, to have a really good cadre of buyer's agents, an emerging sector. And I saw you only recently finalist at the REB Awards in the buyer's agent category. And you've only just, I don't know if a lot of people know this, you've just joined the board of PIPA, which is the Property Investment Professionals Australia. This is the sector of the industry who are driving this thing forward. But they wrote, Lachlan, pretty much what you said. Don't listen to all these, I can't remember the word they used, but these sort of property, people talking about the property market right now, they're predicting 100% growth over a 6-year period. And no doubt that's connected with certain markets, but markets are absolutely booming at the moment in some sectors. It's tough for investors.
Absolutely. I think that it's really important that people remember that anything they read in the media is usually at a very, very significant macro scale, right? Sydney is bottoming out or Australia is softening, but there are thousands and thousands and thousands of markets or sub-markets, depending on how you want to, phrase it, that are moving differently. So when we talk in the grand macro scale of a city or a whole region or the country, it can often be that, that fraction misleading. And I think that it's important that people remember that because we saw predictions when COVID came about. Everybody said that, we'll drop out. I think the biggest was 20 or 25% by some of the big four banks. And we all know how that obviously panned out. So I think that people have just got to take a bit of a grain of salt when they read these predictions or they read these headlines, because they can find themselves getting into a bit of a tailspin, if you will, if they start to read into it too much and just buy hype rather than buying facts.
So, Lachlan, here we are at the back end of Q1 2022. So in March, we've moved into a market this year which is different to what they were talking about last year. The RBA, the mail from the Reserve Bank governor was interest rates to stay stable until 2024. That looks like it will be revised, and we should start seeing rates going up. You should listen to some people towards the back end of this year. Market's still moving with speed, despite what you may read in the paper, to what I mentioned beforehand. And that is not in all markets, at the aggregate level, but micro markets are still moving with pace. Give me some sense for, sales volumes, listing volumes, yield changes as we sort of round out this quarter.
Well, I think at a big macro, or as you said, aggregate level, things look really great. And obviously, when we start to dive deeper down into some of the suburbs or pockets of suburbs specifically, things can look even better. But from my perspective, and I think a lot of people in the industry, things look great. I mean, some of the things that you mentioned, like sales volumes or listing volumes, things like that, they're really good indicators of sort of the health of the market. They're lagging. So for people who don't know what a lagging indicator is, lagging means after the fact. So you need to remember that when you see that data, it means it's already happened, right? So it's not as we see it today, if you were to walk out of your house and have a look at what's going on, but it's still really good because it's often only lagging by a couple of weeks or a month. So it's still pretty accurate for us. And things look great. I mean, I think last month, national sales volumes were up like 37, 38% compared to 12 months ago, which is huge. But when we, I guess, take that into context, that's about 46% above the 5-year average. So the number of sales that are going on, massive, right? So massive. Still demand is absolutely punching through, and people are really still looking hard for properties and buying them, which I think is important to remember. It's not just looking, it's actually being willing to sign on the dotted line and pick something up. But unfortunately, on the flip side, total listings are down well over 30% on the 5-year average. So we've got a lot of people still buying, but we're over 30% below the supply that we'd normally see, which is crazy. And I guess that's why we've been in this market, and we're still in this market of big price movements, big growth. And to me, it's not something that's going to change imminently, because those percentages that, those 30s, those 40%, they don't change overnight, right? They start to come down, maybe 3, 4, 5% a month. So we could have 6 months, 12 months, 18 months of this before it really starts to taper off heavily, right? And that's not a promise for anyone out there, right? I'm not one to sit here and predict the market, but looking at the past and looking at where we are today, I sort of see it from the perspective that it's not getting fixed or changed overnight, that's for sure.
And I know as an organisation, Lachlan, you cover a lot of ground, you and your team at Atlas Property Group. And the good thing is now, coming off the enforced COVID lockdown, you're able to get out and see things and get the actual real world ground truth, if you want to call it. What's your sort of perspective, as you look across the capital city? So getting our heads out of the newspapers and the media and what people are writing about to actually what is happening. Let's call it market intelligence or intelligence. You go out there and you gather intelligence. You speak to agents, you speak to property managers, you speak to all the related people to actually get a real world picture on what's happening so you can make an informed decision. What's happening across the capital cities and the regional markets?
One word, hectic. To me, it's still out of control. Obviously, we're only in the markets that we believe are really strong to invest in anyway. So I guess that's already going to skew the results a little bit. But for the areas that we are looking at, and I think we're going to talk about that a little bit later on, it is just crazy, right? We're having multiple offer situations on most properties. And when I say multiple offers, I don't mean 2 or 3. I mean one property that we were successful in last week, there was 16 offers that got put in. Obviously, not all of them are going to be competitive. I think out of that 16, it went down to best and finals between about 6 of us. But that's huge. I mean, think about 6 people driving, putting out their best and final offers. It is a crazy market. And when we get on the ground and when we're seeing open homes, we're seeing rental open homes as well, it's even busier. I mean, one property that we bought and settled on recently, that it had 10 rental applications from extremely strong candidates on each one. So it's not like we're getting, 2 good ones, 8 bad ones, 10 extremely qualified, willing to pay top dollar to get in. And, this wasn't a blue chip property, right? This was just a nice standard. It was about a $500,000 purchase in the Brisbane area, and people were falling over themselves to get in. And you can think, right, there's only one person got us. There's 9 of those people left over who are now still looking, and they were great quality people. They just didn't, meet the bar for whatever reason, who are still out there. So it's crazy.
Yeah, and I'm hearing a lot of that. The rental markets, and you see this in all market cycles, they shift and change and evolve. We're moving into a market now with sort of quite a lot of upwards pressure on rents, which is good for yields for property investors. There's still, glutted properties in some markets where, they're crying out to get people into them, renting them. But in other areas, it's hugely tight and you can't find yourself a rental property within 10 kilometres of where you're living right now. And it's a real challenge for some Australians, particularly if you're up in Brizzy, right? Rentals up there have gone absolutely berserk because a lot of people have sort of been flushed out of their homes. But what I want to get some sense of from you, Lachlan, is all that sort of information that you shared with us, which was very informative. What are you doing with it and what is Atlas doing as a result of it? We'll just get into that. We'll go to a break. Stay with us. Back in a moment.
Creating wealth through property investing starts with getting the right finance in place. At Finney Mortgages, our brokers specialise in investment loans. We know the ropes to get even the most complex deals approved fast. With access to over 50 lenders, we have the know-how and connections to get better rates, improve cash flow, and release equity fast. So, if you're looking for a mortgage broker that gets property investment, book in a call with a Finney broker now. Head to finny.com.au, that's finni.com.au today.
Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show with Lachlan Vidler, Director of Atlas Property Group. Now, Lachlan, there's strong investment markets. Not all markets are strong, but there are some very strong investment markets right now. And this is what quantifies that original sort of, top line theme of this chat is where are all the investment properties gone. There's 2 types of investment properties. There's probably good ones and bad ones. Let's be clear. There's a lot of bad properties out there that Australians can go and buy right now as investment properties. And if you do that, you're probably going to be part of the 80% of all Australians who do invest in property that only ever own between 1 or 2 investment properties because they buy the wrong one. So what we're trying to help is give you some sense for what the right investment properties are and where those strong investment markets are. Where is Atlas? I know you're going to be a bit cagey on this, mate, because it's your bread and butter. But where is Atlas buying, or which sort of areas are they monitoring right now? I'd love you to give me some suburbs if you can. If you don't, do you give us some clues? That'll be really handy, mate. Give us a sense of where you're operating.
Absolutely. And I want this chat to try and be helpful, right? Like you said, we can't give the keys to the kingdom away because, that's what clients will pay us for. But I do want to have a good conversation around this. And for us here at Atlas, we're across a lot of markets, right? We're in regionals, we're in capitals. And I think people have to remember it's important to get a good mixture, right? One of the key parts of any portfolio is diversification. And diversification can come in many forms. It could come in asset type. It could come in location type. And I think that it's important for people to remember that. And as we've seen over the last probably 2.5 years, regionals have absolutely pumped it, where capitals have still done really well. But you could be, I guess, on a compound level, you could be 11, 12% better off if you had been in a regional at the start of everything that's been happening compared to some of the capitals. But regionals have also been doing pretty well before that anyway. It's just that everyone always has, I guess, when you break it up and you go, all right, there's pre-COVID and there's post-COVID. So people always make that distinction. But we're everywhere right now. We're really heavy across a lot of elements of Brisbane. And I guess we can touch on that first. That's been an interesting market for obvious reasons, right? We've had these floods come through and it has really been a big disruption. And there's places that are flooded that have never previously flooded. And anyone who's ever bought a property in the Brisbane or sort of Ipswich area knows one of the first things you check a flood zone. But now we're in this really unique situation where we don't have data on that's freely accessible on where's flooded. So it adds a dynamic into a market that's still burning pretty hot of how do we make sure that firstly our property doesn't flood, and it relies on agents being good people and there's a level of disclosure. But past that, did any properties on the street, right? An agent is definitely not going to give up that sort of information freely because that's going to impact their sale. But we can't go to any mapping. We can't go to any data source. We can't go to anything to look at what happened in the 2022 floods. And that's a really hard and interesting dynamic that we're dealing with right now.
And it's thrown a lot of, people out with it all, and, trying to find the property where investment properties are right now. And, I speak to a lot of investors, Lachlan. Some of them use buyer's agents, some of them don't. And I find one good mate of mine in particular is a childhood friend. For some reason, people think I know about property, right? So they always call me up. He's like, where should I be buying? And I go, I don't know. I go, go and speak to someone that actually knows there is, or go and listen to the Smart Property Investment Show, right? So he probably spent 3 months on realestate.com with he had a budget in mind, and his mortgage broker sort of sorted out, how much he could spend. And his level of frustration, perpetual frustration around, I've found a place, I think it's in Brizzy, and it goes 100 grand over what they're quoting, and again and again and again and again. He just got so fatigued. He went, I just need a buyer's agent. I'm done with this, right? It is pretty hard going at the moment. Yeah, if I was operating property at the moment, if you want to be up in Brizzy, there's a lot of flood zones up there right now, and to your point, hasn't flooded in many years. So buyer beware. Make sure you're using the right professionals to help you shape and manage that. But Lachlan, you monitor between like 6,000 or 7,000 suburbs right across Australia, which is a lot of ground to cover, right? So you must have a pretty good tool for filtering through that, because you can't be an expert on 6,000 or 7,000 suburbs, right? You want to get the cream pretty quickly. What's been the sort of inventory levels on those, stock on market or months of inventory available? Those areas with lots of inventory with long times to sell probably are the ones that you don't want to go near. But give me some sense of the numbers around all of this.
Yeah, absolutely. And for everyone out there, I think the last time there was a bit of an estimate, I think maybe about 15,500 suburbs around Australia is a number that gets thrown around a little bit, 15 to 16,000 mark. And as you said, at the moment, as a business, we actively monitor about 6,000 to 7,000 of those. So like you said, it's a really big area to cover. Obviously, we don't go and visit every single one of those suburbs because it'd just be impossible, right? I don't have a bank account big enough, and Qantas doesn't give me a good enough deal to be able to fly around to visit all those suburbs. But I think that's where having good data at your fingertips and good data analysis skills is really where the good investors or the good buyers agents are able to come in, because you can just shape it, right? It's about understanding that you don't need to know every single absolute diamond suburb, but you want to be able to group them together so that you can start to get down to that cream of the crop that you were talking about. So I guess if we narrow it down from that 6 to 7, and this is why I want to have this conversation, because I want to give some real color and value to the SPI audience today so that they can get, and this data is accurate as of about the last 3 or 4 weeks, right? So this is real-time data that we pay too much money to have, that we're going to give, I guess, a bit of color around. Inventory, first thing that you mentioned. So for those who don't know what inventory is a really good way to understand supply. So it's a big measurement in America. We don't use it anywhere enough here in Australia, which I think is a bit of a shame. But it's an expression of months. So how many months of inventory is on the market? So for example, say 10 properties sell every month and you've got 30 properties listed. That means that you'd have 3 months of inventory, just so that people can understand what the metric actually means. So of those 6,000 to 7,000 that we monitor, over 60% have had a decrease in inventory over the last 12 months, right? So that could be 1% decrease all the way up to, I think the biggest one was about an 80% decrease. So why is that important? Well, it says that supply is really tightening, right? So 60% has tightened. And we all know, we were talking about it earlier, total listings are down, but that's a raw data stat for you. So I think it was about 3,230, something like that was the actual number that had reduced. So that's a massive decrease firstly. Now, if we then cut that and we go, all right, so we could have had any amount of decrease. What sits below 3 months? 3 months is, I guess, a bit of a balance point in inventory. So if you're below 3 months, you're starting to get some really good upward pressure, or you should get upward pressure on your values because there's very limited supply. 40% of that 60% is now below 3 months. So that's again a massive amount is sitting below 3 months. I think as a number, I think it was about 1,600 suburbs. So huge pressure on the supply side. Now, anyone who's studied economics or watched Wolf of Wall Street or has done anything, knows that the basics of economics relies on supply and demand, right? If there's a really limited supply, big demand, prices go up. Or if there's little demand and really high supply, prices will stay the same or go down, right? It's economics 101. A really good way that we can understand demand is to look at days on market. So days on market is basically how long does it take for property to be put on the market and then for it to sell. Now, one of the problems that come with this is that it relies on agents updating their listings. So it can be really difficult when agents might let it sit for a really long time. Now, for example, a lot of agents won't actually update their listing until it's fully unconditional. So that could be an extra 2 or 3 weeks on top of whatever's going on. So you already get a bit of data skew in there. But right now, I mean, a really big number is sort of that 50 to 60 days is sort of a balance point. We've got about 20% of those suburbs that we've been analysing are sitting below 3 months of inventory and below 30 days on market. 30 is fast. If you've got a property that's selling within 30 days, that is quick, all right? And we've got 20% of all those suburbs going in less than 3 months of inventory, less than 30 days on market. So it is hot. What I will say is that because we're getting a bit of that data skew, a lot of the time, real raw on the ground intelligence on days on market is 5 to 7 days. Because realistically, if properties are getting put up for sale, they are under contract within 3, 4, 5, 6, 7 days. And then it'll take 2 or 3 weeks for that to go unconditional. You know, people might get a building inspection, people might get their finance to get unconditional, things like that. And then the listing gets updated. So the listing might say 25 days on market, but reality is it could be 5 or 7. So it is quick.
It's fast and also probably doesn't take into consideration all those properties that don't even hit the listing platforms, right? Like realestate.com.au. There's a lot of stuff selling pre-listing and that doesn't really even hit the numbers as well. So good market, stuff's selling fast, and it goes to show the best property investors are those who, number one, know what they're trying to do and have a strategy around it, and number two, they're absolutely finance ready. I'm talking a lot about finance at the moment because it's absolutely critical. I'm going through a whole refinancing process myself, Lachlan, which is quite good fun with Finney Mortgages. It's good fun at the moment. They're doing a good job. But so those days on market are 5 to 7 days. So if you don't have your ducks in a row, you can't even participate in this marketplace.
Absolutely. Well, think about this. Average, couple, let's say a couple, they work hard, they rock up, they come home, they just want to have a nice glass of wine at the end of the night because they work really hard. And they go, oh, you know what? We should probably have a look at realestate.com or Domain to see what's on the market. They go, no. You know what? Let's just do it tomorrow night. And then, they do it again. And suddenly it's Wednesday night. They're 3 days into the week. And they go, all right, let's have a look. They see a property that got put on the market on Monday. Chances are it is already been snapped up. And that's why it's so hard for the average person right now to be able to get anything. Because if you're not used to being able to do the analysis, do the checks that you need to do, right? Do those flood checks we're talking about relative to Brisbane, do maybe bushfire checks, things like that. If you're in some really bushy areas or some regional areas, if you're not used to doing all that, running your numbers, doing all that, how are you going to get anything, right? You're just going to have to throw money, probably pay overs and by a lot. Bank might not even give you finance just to be in with a shot. Like it shocks me. And I'm having a tough conversation with clients at the moment saying, guys, you need to understand it is very likely I might call you and say, we have 24 hours or at best 48 hours for you to read through all of our analysis and reporting and tell me that you want to proceed. And the longer you take, you need to understand somebody's probably coming in and putting offers.
Yeah, and this is where a good buyer's agent can help you. And there's a lot of tactics for those of you out there to get all the benefits of controlling a property without sort of being completely committed to buying it. And you need to know what they are. I've done it many, many times where I'll either be the first person through a property when it has its first open home, or try and get some sort of exclusive sort of pre-visit so you can get in there before anyone else, walk in there and go, all right, job done. What's the number? Okay, let's go. You sign the contract. That doesn't mean you need to buy the property, right? And a lot of agents don't want you probably to know this, and it depends on different states, but you have cooling off periods, right? So you actually, if you're buying at auction, it's very different. If you're buying a private treaty, it's different again. So you have structural cooling off periods built in So you can control the property for a period of time while you negotiate a contract. And you might even then try and extend the cooling off period. You can extend the period until it goes to a sort of formal exchange, all these sort of things. And that allows you to do your pest and building inspection, to get your finance sorted out, to do all the checks that you need to give you confidence that you actually get with the purchase. And if you don't know that exists, well, welcome. I've just given you the tip of the lifetime. And you're operating in a market with people that do know that, and particularly their buyer's agents who will go in there. Lachlan, you probably know a good property when you see it. You'll buy it straight away. You'll snap it off, move into a cooling off period for your client, and then use that period of time to actually work out whether or not the investment is a good investment, whether or not it ticks all the boxes. So this is the game of property. This is the game of property.
Absolutely. We literally had that situation last week. We found a great on-market property listed that morning. We had our offer accepted 4 p.m. that day.
Yep.
We were done. Exactly as you said, using tools, using tactics, because you can do things to control the narrative and control the property. And depending on where you're at and depending on the values you're dealing with, it might cost you $500. It might cost you $1,000 if you want to pull out at the end of it, if that's the tactic that you're going to use. But what's $1,000 on some properties where that might be made in the space of a week, right?
Yeah.
In the growth that's going on. But the compensation is you get in there, you get to control it, and you don't spend another 2 months missing out, which could result in 30,000 of capital growth missed for the sake of $1,000, right? And it's a great tactic. But yeah, having that situation last week, it's important for people to understand that it's not meant to be a scare tactic or anything. It's meant to be just an honest discussion around, if you can't pull a trigger and move quickly, you're going to struggle right now, because other people can, and they're the ones who are succeeding right now, as opposed to the people who can't pull a trigger.
Yeah, Lachlan, mate, I've seen it, I've done it myself. And again, another tip or tool for the punters out there, reviewing a property going, okay, I like to buy it. And sometimes it takes some time to get, if it's an open home, they're not going to be able to get the contract over to you, maybe at best if it's a Saturday by the end of that day or on Monday, where I've gone, okay, I'll buy it. What's your trust account details? And I'll sit there in person, face to face, pull out my phone and transfer the 0.25 into their trust account just to secure the property and say, I'm a serious buyer, send me the contract over and we'll get it all sorted out. Guess what happened? If you don't go ahead with it, that's okay. Again, it changes and it's different depending on the state. But by law, they've got to put that money out of their trust account back to you. So essentially, it just gives you control, controlling the asset, controlling the property. And to your point, Lachlan, you could, if you today on a Saturday say, yeah, I'm in, here's my money, the trust account, that means you're controlling that property in by and large. If it takes you 2 weeks, 3 weeks, even a month to actually get to a contracting phase, and then you've got a cooling, a settlement period, you're getting all the upsides for that period of time as well. So it's a really good way. And you probably want more info or you want some understanding of that. No doubt, you can give Lachlan a call. He can actually talk you through how the really good buyers agents do this. But Lachlan, it's an interesting market, an interesting picture that you're painting right now. It is definitely a market in flux where it's gone from a hot market, a red hot market, to a normal market. And that's what we're moving into. And normal market, let's let it clear, doesn't mean they're going sideways. Normal market means there's some areas which continue to grow and grow rapidly. And there's also areas that will go south. That is a normalized market. And that's how real estate happens. But there's some sort of other factors which you need to overlay into that. And, thinking about it, we're sort of a couple of months away from a federal election, right? Who knows what happens? So I want to get some sense to that. We'll just go to another break. Stay with us. Back in a moment. Welcome back, everyone. It's Phil Tarrant, host of the Smart Property Investment Show with Lachlan Vidler, Director, Atlas Property Group. Lachlan, there is some uncertainty at the moment. Global conflict is looming. There's a European war. We've got the RBA potentially putting up rates, official cash rate. We've got banks who are really rattling the cage, probably looking to move prior to that. Inflation, consumer sentiment, jobs. There's a lot of things going on, mate. And back to our economics lessons, we could probably all go back to year 12 and get a sense of it all. How are you reading it now, mate? What's the things to watch for the next sort of 6 to 9 months as we round out 2022?
I think it's going to be a really interesting period where I think we're operating in a bit of a world that people don't really know what to expect. I mean, you look at, say, the GFC, right? We had some big economic things occur, but there was the interest rate lever that could get pulled, right? And banks were able to drop rates and things like that to be able to supercharge the economy. we had COVID in a time where interest rates were pretty low as is, and they went to almost zero, and there wasn't much pull left in that. So we've certainly got ourselves into an interesting scenario that I think there's a lot of economists that are licking their lips to make university case studies and things like that about how we come out of this period globally. So I think it's going to be really interesting. I think there's probably 3 really big things that people need to watch out for. And I'm not going to say positively or negative or what they may or may not do. I mean, my background is not as an economist, and I wouldn't be silly enough to want to try and predict the future with my wonderful crystal ball that I leave on the desk for clients. But I think the first thing is inflation and how the RBA may or may not look to respond to that. It's been all over the media recently. We're looking at how cost of goods is really rising. I mean, we just have to look at fuel. I mean, it's sitting well over $2 a litre right now, and it's putting a bit of hurt on people. And I think that the thing that people also forget about inflation is it actually has a real effect, right? You've got nominal and you've got real. So nominal is about what's the actual percentage, but real is what's the actual impact that comes from it, right? So you could have a nominal inflation of 5%, but if your wages go up 4%, you're only having a real change of 1%, right? So it's something for people to remember. Wage growth has been pushing along, but inflation seems like it might be ticking that little bit higher right now than wage growth. So I think people are actually having a real decrease in purchasing power, and that's going to have flow-on effects, right? You can't save as much. You might not be able to then have your deposit. You might then not be able to buy the house that you want, or you might be able to not be able to buy the big house that you want. So there could be some impacts that come about from that, and that will be really interesting to watch. And then the RBA response that might come from it, right? We're talking about interest rate movements. We're talking about other regulatory changes that could come in. I mean, there was a report that got released very recently about, I can't remember which government agency that brought it out, but it was looking at how maybe there should be a little bit more qualifications required around property investment advice, because right now it's very unregulated. So there's different things that come about, and obviously housing is a really easy item for both parties to talk about, right? And so I think it's going to be interesting, right? So I think inflation and the RBA response is going to be really something to watch. I think the next big thing is going to be consumer sentiment. And part of that I want to talk about is the interest rate rises, because people are getting really worried. People are getting really, really worried. Rates are going up. We're already seeing it from some of the banks. People might be paying an extra 0.5% or a full percent more than if they were getting a loan this time last year. But in the scheme of things, that's not a lot, right? People are jumping from 2.5% to 3.5%. If we went back 5, 6, 7 years ago, people would have been stoked if they were paying 4%, right? And we're still well below that. So what I think the potential interest rate rises is actually could give a bit of rise to is changes in sentiment. And I think that that's a really big driver, because if people are sad, people aren't going to spend as much. So it's not necessarily that maybe any interest rate rises that come about might have big impacts on the market on a monetary basis. It's they might make consumer sentiment change, and that could be what drives it, right? People don't want to go out to the auctions. People don't want to bid on properties. People don't want to put in offers. That would be something really interesting to look at. What do you think, Phil?
Oof. Well, we know that COVID-19, which really kicked off about this time, really 2 years ago, is when all the impacts really started coming in. We were getting going into isolation, and there was a real fear in the market. Australia's navigated COVID largely pretty well, but there's been a lot of negatives as a result of COVID, and it's been hugely impactful on a lot of people, both physically and mentally. You know, as Australia emerges out of its COVID pandemic, one of the upsides of it, Lachlan, is that family balance sheets are the strongest they ever have been. Australians have put money aside or away, mainly because they probably couldn't spend it. They couldn't go on overseas holidays and do all the stuff they normally would do. But advancements on mortgage payments is as high as it's ever been. Aussies have more money to spend. And you sort of match that with the whole idea of, people have seen 25% growth. Some people have seen 25% growth in their property value and therefore their wealth, right? People feel like they've got a few bucks in their back pocket. So when you start talking about raising interest rates, that concerns a lot of people because they worry about their rice bowl. What does it mean? Am I not going to be as financially well off as what I have right now? And no doubt as they go into the federal election, both sides of politics will be very conscious of that. to make sure that Australians have that notion of prosperity. Is fundamental to the nation and how we sort of grow and evolve moving forward. So big interest rate questions obviously gets the headlines, but you've got to put it in perspective, and I think you did that very well, Lachlan. We're at all-time record lows of the official cash rate, and I doubt we'll ever come back to it in a normal environment. We've had 2 decades of unprecedented economic growth in Australia. The only recessions we have were absolutely forced on us or manufactured as a result of the COVID pandemic. Australia continues to grow and evolve. Some big challenges for Australia moving forward. We look at the unemployment rate right now. Anyone in Australia that wants a job has pretty much got a job. I hear of people, Lachlan, trying to fly people out from the UK to get them jobs in hospitality, right? Like, we need more people in Australia. And fortunately, we've had a lot of expats coming back, realising that Australia is a pretty good place to be. Hopefully, we can keep them here with the right type of jobs, and whether that's sort of high-tech manufacturing or technology. And I know the government's doing a lot of work on that. But we need to open up the borders, and we need to get new Australians here to live, to build their families, to generate wealth, to provide and participate in the provision of tax receipts for the government. And I think that's going to be a real test for Australia to accelerate that in the right way, but have the right attitude to embracing migration and empowering it. Because guess what? That's all good stuff for property investors, mate.
I totally agree. And I think people can sometimes struggle to keep things in perspective because we're so focused on what's happened today or what's happening recently. And it can be hard to remember, even just 2 years ago, to think about pre-COVID. I mean, Knight Frank, big real estate company, brought out a report recently. And in that report, they said up to 48% of Australians said that their budget hasn't changed since the start of the pandemic. And I think really going to what you were talking about family balance sheets being stronger and things like that, not only have prices or values of real estate gone up, but we've got almost 50% of people saying that their budget's not changed. And yet we've had interest rate drops. We haven't had any inflationary pressures really over the last sort of 2 years. You'd have to say that people have had a lot more purchasing power than they've had at any other point in the last, recent memory. It's just been incredible. And it will be a change, right? I think that it will be a change for people, particularly younger people who might not have experienced it, when they do see that their purchasing power starts to decrease over the, maybe next 5 years, maybe 10 years if we go out that long, because it will happen. But in the scheme of things, what we should also see then is good wage growth, right? If inflation's up, we'd want to see good wage growth. So there should be a lot of offsetting factors that I think people can sometimes just forget because they might get a bit wrapped up in the hype of whatever it is, right? We see it in property prices. We're seeing it now around inflation and interest rates. There's always hype about something. And I think that people just sometimes need to just take a bit of a breath, actually sit down and think about how will it impact me? Is it going to be bad? Is it going to be pretty neutral? Am I really going to change that much? Or am I just worrying about something that really it's not going to change too much in my day-to-day life?
I can agree, mate. So, lots of information there for our listeners. Thanks for sharing your insights, Lachlan. I'll probably close with this question. If you're a property investor with properties, what's the first thing you would do subsequent to listening to this podcast?
I'd definitely take a look at my equity position. Rates are not going to be any lower. And if you've got any inclinations of investing in more properties or things like that, it may be very beneficial to take out any equity that you've got sitting there at a pretty low rate. So that'd probably be my first thing. And then the second thing I'd say to anyone is best time to invest was yesterday and the second best time is today. So if you've got the risk profile and you've got the capacity and you've got the desire as well, because some people don't. Not everybody wants to be a Grant Cardone or a Richard Branson with all these assets and pieces of real estate. But if you do want to be in a bit of a better position than what you are, I'd maybe think about trying to capitalize while you can today. Yeah,
I completely agree. And speak to your mortgage broker. What Lachlan's talking about there is a really smart thing to do. And again, it comes down to the product. Get liquid. So if you're looking to do something, do it now. Refinance what you've got. You can push it up to 80%. That's not advice at all. It's, mortgage broker can help you out with that. But remember, that money can still work for you. So even if you refinance, if you have that money sitting in an offset, ready for a rainy day, i.e. to buy another property, it means it shouldn't change your repayment position because a lot of the interest rate will still be offset. So speak to your broker, get that sorted out, and then you can strike when you're ready. Lachlan Vidler, mate, great to chat. I always enjoy getting together. Director, Atlas Property Group. Stay in touch, mate. Keep up the good work.
Thanks, Phil. Great to be here again.
Nice one. Go and check out the guys over at Atlas Property. Just Google them. I'm sure you can find them, track them down. And Lachlan's always good for a yarn. Remember to check out smartpropertyinvestment.com.au. We spoke through some themes there. If they're sort of wondering what they are, like equity release and refinance and redraws and offsets and all this sort of stuff, smartpropertyinvestment.com.au will help you out, keep you informed and educated. Remember, if you like social media, Smart Property HQ is where you'll find us. See you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Leverage the power of your super with an investment loan through your self-managed super fund. Our expert brokers can help you invest in residential or commercial property through your super, even if you don't have the funds to buy an investment property outright. At Finney Mortgages, we have access to the lenders who specialise in loans for self-managed super funds, so we can maximise your loan amount and get your loan approved faster. To secure your financial future, book a call with an experienced Finney broker. Head to finny.com.au. That's FINNI.com.au today.